Analysts see XRP hitting $4, Solana $250 as ETF buzz builds. XRP's ETF exposure is currently limited to futures, but analysts say any progress toward a spot product could drive a second wave of inflows, particularly if the SEC maintains its softened posture post-March ruling. XRP is regaining investor attention as a wave of ETF-driven optimism and post-lawsuit momentum builds around the token, even amid price turbulence and large-scale liquidations earlier this week. According to Bitget wallet CMO Jamie Elkaleh, institutional confidence has improved since Ripple's partial legal win in March, paving the way for futures products like ProShares UXRP and fueling speculation around a potential spot ETF. XRP is regaining market momentum as renewed ETF speculation intersects with increasing legal clarity, Elkaleh said. This shift is boosting market depth and signaling a structural step forward for XRP's legitimacy in U.S. markets. That narrative helped XRP briefly break above $3.60 before retracing to around $3.09, following $105 million in long liquidations and a controversial $175 million wallet transfer linked to Ripple co-founder Chris Larsen. Despite the volatility, analysts remain constructive. Renewed ETF speculation and legal clarity are significant catalysts driving XRP toward the $3 mark, said Ryan Lee, chief analyst at Bitget Research. With momentum, $3.50 to $4 is plausible in the coming weeks. XRP's ETF exposure is currently limited to futures, but analysts say any progress toward a spot product could drive a second wave of inflows, particularly if the SEC maintains its softened posture post-March ruling. Meanwhile, Solana is also catching a bid on the back of ecosystem growth and ETF chatter. The token now trades near $197, with analysts projecting $200 to $250 as the next range if adoption trends continue. ETF conversations around SOL are further amplifying interest, Elkaleh added. With a more crypto-friendly regulatory tone emerging in the U.S., sentiment around both XRP and SOL remains constructive. Both assets face downside risks from macro pullbacks or renewed regulatory friction, but analysts believe fundamentals are finally starting to align with market structure. Liquidity is improving, institutional flows are growing, and ETF products, even if only futures for now, are creating a bridge that retail and funds alike are beginning to cross. The next move may depend less on narrative, and more on whether inflows can keep pace with expectations. Shaurya is the co-leader of the CoinDesk tokens and data team in Asia with a focus on crypto derivatives, DeFi, market microstructure, and protocol analysis. Shaurya holds over $1,000 in BTC, ETH, SOL, AVAX, Sushi, CRV, NEAR, YFI, YFII, SHIB, Doge, USDT, USDC, BNB, MANA, MLN, Link, XMR, ALGO, VET, Cake, AAVE, Comp, Rook, TRX, SNX, Rune, FTM, ZIL, KSM, ENJ, CKB, Joe, GHST, Perp, BTRFLY, OHM, Banana, Rome, Burger, Spirit, and ORCA. He provides over $1,000 to liquidity pools on Compound, Curve, SushiSwap, PancakeSwap, BurgerSwap, Orca, AnySwap, SpiritSwap, Rook Protocol, Yearn Finance, Synthetics, Harvest, Redacted Cartel, Olympus DAO, Rome, Trader Joe, and Sun.